Hi, my name is Boris and welcome to Cosmic Trading. And today was a pretty decent day, except for semiconductor, of course. Anyways, we're gonna check the weather on Microsoft, GME, XOP, and we're gonna map out JETS, which is the airline ETF. Let's start with Microsoft real quick. As you can see, in the past week, we went up a decent amount and then we encountered this as a resistance. And we tried to use the blue trend line as support, but it failed. Looks like I drew this trend line since pretty much January 14th. I think it's time to update this, and it's pretty clear what path we took from the gap of uncertainty. Anyways, let's update it real quick. Alright, this overall downtrend is now at a level 4 downtrend, so that means this downtrend is getting weaker and weaker. So we should be getting close to the bottom of this current downtrend cycle we are on right now. If the market turns very bearish, we have another 6% to 7% on the downside. So if you're planning on shorting, well, good luck. I don't short the market because in my opinion you have the probability of winning a lot more by betting on the market versus against it. That's why I like buying the dip and not short the market. That's just me. Now if you look closely at the current uptrend we are on, it's very hesitant. Whenever I use the Hakinashi tool, you can usually tell when the wave up goes. It has this very fluid wave look. It's hard to explain, but when you see it enough time, you kind of see a pattern. But here it's different. There's a lot of hesitation in this, so I feel like the market is really unsure about what's going on currently. Anyways, let's move on to GME. Alright, if you remember the last time we talked, I said we had another pretty much 10% to the upside, but GME being GME, it went way above and beyond, but clearly we got rejected and we're back to the red. But funny enough, we are using this purple trend line as support again. That must be a very strong support trend line. But if we were to continue with this current downtrend we are on, we have another 9% to the downside if worse come to worse. Alright, now let's move on to XOP. XOP been pretty much trading sideways. Not a lot of action this week, but we still have a nice 10% to the upside if best case scenario we meet with gap 1, and 6% to the upside if we meet up with gap 2. And if we decide to go full on back to a downtrend, well, we got another 12% to the downside. But it doesn't look like we have a lot of resistant line on the upside, so I think we should still be going to the upside. Alright, let's move on to JETS. Like I said before about JETS, JETS is a airline ETF. Now the reason why I trade airline ETF is because I think for the rest of my life we're always gonna need airplanes to travel. It's not like we're gonna suddenly start using a teleportation device. I'm pretty sure no matter how bad the economy gets, we're gonna need airlines, and they're too big to fail anyway. So if anything happened, the government will step in and, help them out. To me, airlines is the most permanent thing and easy to trade because, as you can see, we've been trading sideways for like forever. That's just how airlines work. Even after the 2020 crash, which was really bad, but we bounced back up and we are trading sideways again. The system to trade airlines is the easiest possible. Let me show you real quick. Let's say I have $1,000. I can use each of those lines from the Fibonacci retracement tool as a support where I buy the dip. So I would buy 200 here, 200 there until we reach all the way there and average down accordingly. Now that's just to buy the dip. But when do I sell? That's when I use trend lines, the same way we've been doing the entire time, the golden angle principle. So let's say right there, I were to take a quick measurement right here. Let's say, oh, I decided to buy the dip right there. And then suddenly the market goes up and I'm like, oh, you know what, it can go up a little further because based on the trend line we have a little bit more room to the upside. And when it get close to this and it's hitting that line, that's when I would be like, okay, well, it's time to sell, and that would be it. It's pretty much that easy. So I would set up like buy dip automatically around here or sell automatically around there. Set it up, forget about it, and when it happens, and I would keep track. Pretty much that simple. It's not that complicated. Now, just to let you guys know, I do want to make a video about the art of averaging. There's a lot more to averaging than just what I showed you. It's just been busy releasing video every day, work and all that. It's been a little difficult, but eventually I'll get to it. Anyways, let's take a quick measurement of this current trend we are on right now. All right, we seem to be trading at level 3 right now in the current trend we are on, and we are using this as support. So going back to my example, if I had $1,000, since this is at 100%, I would be putting 200 here and another 200 there. So I would probably average down to about $400 right here, but I'm just giving a small example, obviously. Also, let's take a quick measurement of the downtrend. So best case scenario, we have another 15 to 16% on the upside in case we hit this downtrend and get rejected. So that's a lot of room to the upside. So to me, this is definitely worth the bet. And also, there's another reason why I hate shorting, because time is not on your side. When you bet on the upside, time is always on your side. So even if you get to hold the bag, guess what? If whatever you're betting on eventually goes back up, then you're always gonna win. And this is why I like stocks like Jets or semiconductor, because eventually it will go back to all-time high. We all know that. It's just a matter of time. Anyways, if you're trading any of these stocks we talked about today, I wish you the best. That's it for me for tonight. Thank you for watching, and I hope to see you next time.